Howdy traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. And so let's get started with our morning analysis and go through all these majors. Okay. All right. So let's start off with the euro. And what we're going to do here with the euro dollar. And one of the things that I was thinking about this morning, and I want to stop for a moment, and actually I'm going to remove everything for this particular chart. Okay, we're gonna start over. Well, one of the things that I was thinking about it this morning. I'm like, man, I haven't seen horizontal resistance levels mean a whole lot in this market for a while. It seems like everything's on some sort of slanted trend line, whether you're dealing in a triangle or a wedge or whatever. And I was sitting here looking at the euro dollar kind of since I don't have a position anymore, and I was just sitting there going, man, we're approaching some pretty good horizontal resistance, although that this downtrend line or this triangle pattern, like maybe that's not what the market's looking at. I have, I don't know. I don't know. All I know is this resistance that had been a big deal. Was it a couple of weeks ago when we hit that 114.50? I'm assuming that's going to be pretty big resistance again. Now, here's the thing. If we take this out, that's going to be huge because, in my opinion, it's going to be huge because what it does is it then sets up a move towards 115 or maybe even higher, because then what we're dealing with is probably an upward sloping channel that looks like that. Okay, so keep your eye on the euro as we approach this 114.50 level, and it's going to be pretty key. Now, obviously, we're up against pretty critical resistance as it is right now, and whether or not we're going to be able to overcome that will be, I think, due to it's going to be data dependent. I hate saying that, but obviously that's what we got to be focused on right now is the data dependence. But keep your eye on this horizontal resistance that's coming into play, which we're going to call it 1465 because 114.65 was the high here. Well, we hit 66, and we're approaching it now. And so if it does break, that is going to expose a move towards maybe what this is channel resistance. Okay, now if you look at the euro longer term, I mean, just take a step back for a moment. This is still very valid. That's a weekly chart. Okay, it's just how far will the euro grind up, in my opinion, before it just rolls over again. I mean, if you look at the grand scheme of things, and whether it may not be that, because that would take the euro down to like 60 cents. It may be more like that. Okay. The question to me is, well, how far do we go up before we show signs of reversals again? And I thought it would be quite possibly the Fed meeting, because it's usually surrounding an event, right? So if the dollar had an opportunity to reverse, the opportunity would have been yesterday. Should the Fed have been more hawkish, the dollar may have turned lower yesterday, but it didn't. It was worth taking a pop shot at it, in my opinion. And for those of you that didn't know, I actually shorted the New Zealand dollar. Well, you'd had to be in the chat room to know this. All the people in the chat room, we shorted the Kiwi dollar at 69.90. And post GDP numbers, I got out of the New Zealand dollar at 69.20. So it was and so that short in the Kiwi dollar made up for all of my woes over the last couple of days, and a lot of people in the chat room made some pretty good money shorting the Kiwi yesterday. Anyway, the reason why I say that is because I took a pop shot at the euro yesterday because I thought it was a valid reason to do so. Because again, you need there's usually some sort of a event catalyst that will drive the dollar back into overall strength. I'm assuming now it's going to be something to do with Greece. As the next couple of weeks develop, the euro is going to start moving higher, and everybody's going to go, oh man, the euro, here we go, the euro is going back to 120, and then Greece is probably something's going to happen with Greece where it does the old-fashioned rug pull in the euro, and the euro starts heading down again. The trick is, because it's not data, it's going to be probably a headline. I'm assuming, because it always happens when I'm sleeping. The good stuff always happens when I'm sleeping anyway. It's probably going to be, I'll be asleep one night, and we'll have the euro up here at 115, or maybe 114 and change, maybe even 116, and I'm going to wake up and the euro is going to be 200 pips lower because of some headline that hit the wires about Greece, and I'll be like, man, can't believe I missed that one. But you can't. You can get lucky and time something like that, but it's hard to time the market based on an event that's unforeseen. Especially when you're dealing with like a Greek headline or something in that nature. But my assumption is we're probably going to, find some sort of resistance up here somewhere in that, somewhere in this neighborhood before turning lower. But we could very easily just turn at resistance as well. That's why I'm a little unsure of what to do with the euro at the moment. And it's okay. I don't, like I said, I don't have any problems, looking at the euro dollar and saying, okay, well, I just don't know what to do with it at this moment in time. There's other currencies to trade right now, and that's why I'm buying the dollar Canadian, and I don't mind buying it at these levels because I've been waiting for this price for a while. And I don't mind being short a little bit of cable either, because I think the cable's hitting some key resistance. The euro, not really too sure how I want to deal with it. I do know that really key resistance today is going to be at 114.65. Okay, and actually, let's go ahead and put an asterisk next to that because that is going to be really critical. And, I'd like to say we're in a bullish range, or a bullish trend, but here, let's do this. The euro looked really bullish right here too, didn't it? If you look right there, you go, man, the euro looks bullish. Bam, we're right back in the range. So, the euro seems bullish at the moment, but again, we're also at pretty key support and resistance levels against a lot of currencies right now. So, you have to be careful here. I still think we're range bound. All right, support. But it's bullish. It's bullish intraday. I can safely say that, I think, on the euro dollar. And while we're above here, it's got a bullish intraday trend. All right, but let's figure out where support is. So if you're long the euro and you're, like, let's just say you were buying it this morning. Let's say you bought it in Asian trade last night at 114.50. As we were holding above 113.30, so you bought at 113.50 overnight. Where is it that you would, pull the plug on your trade? Because that's what I want to figure out. Like, when do people that had been buying the euro dollar, when did they go, oh man, that's maybe I need to be looking to exit? It's probably going to be right down here at that 1330 breakout point, or right over here is the 1330 breakout point. So 1335 is the spike low, and while we're above 13, you know what? I actually probably should change that just in case. God, it's tricky. 1335 is support. Okay. Because that's the spike low in Asian trade. That was also the breakout point here. And remember, we had this. That's where I made the decision. I need to be out of my euro short, and that's probably where people go, oh my God, that's where my stops are at too. I need to move my stops up to break even here, because if they break back below there, I'm, you know, probably going to be a false breakout or something. So 113.35, that's going to be pretty critical support there. Um, let's go over to the pound dollar. Okay, so the pound, man. All right, here is what we drew yesterday. We're at a 50% retracement of this entire move down. It's at 158.88, where obviously we overshot it, by 30 or 40 pips, which doesn't surprise me, because it's been such a strong move. I mean, this has obviously been a very aggressive move here. We are now divergent on relative strength. Okay, so what you'll notice here is relative strength is higher here than we're at currently. You see that? So we went higher in price, we're diverging in relative strength. That's concerning. If you're a cable bull right now, you have to be looking at that going, okay, that neckline looks like it's going to hold. If you think about the distance it took to build this shoulder, let's just say roughly right there, okay? Yeah, let me move this over here. The shoulder could theoretically, in time, take another, puts us out to the end of the month. It could take another end of the month to be equivalent from a time perspective, if we're going to build out a shoulder that is symmetrical, okay, between peak, 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 if this is the peak. So I guess what that should caution you is be very, very careful being long the cable up here. The pound's pretty efficient at doing some false breakouts, right? We talk about that quite a bit, where you get this breakout above here. If the pound closes lower today, and that's going to leave us with it's going to be a pretty ugly chart, because you'll have this breakout. No one who's looking at the inverted head and shoulder pattern, everybody who's looking at a more of a horizontal breakout, right? If that candle turns red, it's just going to end up being a false breakout. So, which the cable is pretty efficient at doing that. Does it quite often, actually. Let me remove that for a second. I just want to redraw the neckline that I screwed up here. Let's do that. And let's go back and go like this. So let's figure out where resistance is today. All right, so let's pull that relative strength down a little bit. Okay, and let me get rid of these circles. No, I don't. Just getting rid of them just to minimize clutter here. Okay. So I think the 127% extension still takes us further. Yeah, that takes us to basically 160. And let's go over intraday. So resistance from here would probably come in at 160, because we have this 159.99, 59.90 which is 127% extension. Let's make sure that that number's correct. $59.85. That'll be resistance. 159.85. And where's support here? So let's go back to the hourly. This obviously is a breakout point. So, and if this channel, if we're following, this channel somewhat, that means this channel support comes in right around 158.50. So as long as it's above 158.50, it's bullish. It gets below 158.50, and then you have to be a little careful. Okay? Grab some coffee. All right, let's go take a look at the Swissy. So the Swiss National Bank left rates unchanged. No real guidance from the Swiss National Bank either. You guys know I'm not particularly excited about this currency. I'm just more concerned that something out of Greece is going to erupt, and then next thing you know, you've got some ridiculous Swiss francs strength, and I just don't want to be on the other side of that in case that comes. So we took out the 786 retracement. Let's see here. That last range. So 91.25 will offer some minor support. Okay, resistance now. Any move back to 92.25. It's going to offer resistance. Still a big old fat range too. It's like the euro, it's just in a big, whoops, here, it's in a big range, but I don't want to be on the long side of that because of Greece. There's no incentive to be on the long side of that at all. Let's take a look at the yen. So here's the yen. So the yen's sitting on pretty key support here. Look at that. All right, now let's take this away. Let's talk about what happens here in the dollar yen. The dollar yen can obviously influence the dollar, but what we have to pay, in my opinion, what we have to pay really close attention to is we have to pay attention to the dollar yen if it's breaking down and equities are moving lower. Now, there's a chart that I'm watching pretty carefully that I'm going to show you right here. So I'm watching the DAX really carefully because the DAX, although the U.S. equity markets, they've been choppy and holding up. Look at the DAX and look at this 4-hour chart. What it's developing, and we can zoom, wrong direction. We can zoom in a little bit. Okay, this is the DAX, right? And I just zoomed in 4-hour chart pretty closely. That right there, folks, is a bearish wedge. You see it? Okay, so now we're going to zoom back out. Now, the reason why that dotted blue line there is because that's a 38% retracement. So if you go over to the daily chart, you can see 38% retracement, and we're wedging, which is a bearish wedge, by the way. We're wedging right into that support. So when you look at that chart, the likelihood of a bearish break is higher than a bullish break. Okay, so there's more of a likelihood of a bearish breakdown of the DAX at this moment. So with that being said, and matter of fact, what I should do here really quick is I should tweet that chart because I think it's really important for the DAX. Just give me a second to do so. Give me a second to tweet it. Hold on. Let me just write down this number really quick. Okay. The reason why I care about this is because if the DAX breaks down, obviously the U.S. equity markets might have a little bit of a problem, but you would see that more than likely you would see the U.S. dollar, you would see the U.S. dollar, Japanese yen fall. First inclination of that would be, all right, well, if the U.S. dollar, Japanese yen falls, the dollar is going to get hit. But it could be the yen pairs. So then, you might actually turn if the DAX goes down, you might turn your focus to the euro yen, Aussie yen, New Zealand yen, pound yen, that type of thing. Because again, what I'm trying to do is I'm trying to shift my focus away from the dollar since I'm not super confident in the dollar at the moment. I'm trying to shift my focus to some other like crosses, like the maybe the yen pairs. The euro yen, as you know, 141 is a huge resistance. We've been really unable to remount the 141 level, and maybe that's a pretty good indication of a market that probably is ready for some risk aversion. So if the DAX starts to pull back, will some of these yen pairs follow? So anyway, dollar yen, really important support at 122.50. And do keep in mind, if we do break this, then it could spur dollar weakness initially. 122.50 ish. Let me make sure that, what's the low here? 44. Okay, so let me 122.45. That's a pretty key support. Resistance is going to be back here because if you're long the dollar yen, you're probably like, thank God, just if it can get back to 123 and a quarter, I'll take some of that off. So 123, 20, 25. I still think we're range bound overall. Okay. Okay. Let me see if I can squeeze out the Canadian really quick. So, everybody, you all should know that I'm long the dollar Canadian here. I've been waiting for this price. We hit a 127% extension. We're sitting on the 127% extension right now. We went as low as 121.51. The extension is at 121.50. Oh, it's 121.60. We have horizontal support that comes in at 121.60. We have our double top, right? Double top completion at 121.60. We have a 618 of the entire move at 121.60. And, you have some previous resistance right around this 121.60 or 50 level as well. So really huge support. I've been waiting for that dip down to this price So I went long this morning. I'm long here. Now, support here, I'm just getting rid of this stuff from yesterday. So we have 161% extension down towards 121. Okay. And um, 121 could offer some support. Okay. Because it's 161% extension, which is my favorite fib level anyway. So keep your eye on 121. Let's say 121. Yeah, I think 121 in general. I mean, because we're sitting on support right now, but obviously we can go further because the dollar is pretty weak. So 121 support. Resistance is going to move back up to 122. This is where, you know, if you're short the Canadian, you probably go, oh crap, it's starting to squeeze now. Thought I drew a line there, but apparently it didn't go through. There it is. Okay, so that's going to come in at 122. Let's make sure we got all these lines removed that we don't need. Yeah, so 122. Okay. All right. And we're in a big range. I mean, we may be, have a bearish trend the last couple of days, or actually the last week or two, but in the grand scheme of things, we're very much range bound in the dollar, in the dollar Canadian. Okay. I'm going to hold us up right here. When I come back, we're going to take a look at the Kiwi, Aussie, dollar index, all that fun stuff. So I'll be back in a few moments. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So let's go ahead and we're going to continue on. We got to do the Kiwi and the Aussie and the dollar index and some of these other currencies too, if we can nail them down. So I'm going to go ahead and go over to the Kiwi. So the Kiwi got hit. Obviously, the GDP numbers came in weaker than expected, and so the Kiwi sold off to 69, and so 69 cents once again offered support. Okay, so post FOMC we went to, or pre FOMC we went to 69 cents, and we bounced up to 70. GDP numbers came out. We're basically back down to 69 cents. Now we're bouncing again. So the question is that I know I'm asking, and you're probably asking, well, where is the Kiwi coming to good resistance again? Because it's obviously bearish, but it's bouncing around. The reason why it's bouncing around is a lot is because, well, we have dollar weakness. So if we have dollar weakness, the Kiwi is going to have a difficult time going down. But if the dollar starts to gain some strength, where does it turn and start heading lower again? And this is like one of those dollar currencies that I want to be on the short side, and maybe just a little bit higher if we can get it before the news. I might actually peel my way into a Kiwi short here at 69.70. So we're getting really close. High, low. This is a 618 retracement right now, so might actually be great resistance right at this moment, but 0.6970, and then supports at 69. It's bearish. It's having a hard time going down because the dollar has been weak. Okay, let's go over to the Aussie. All right, so the Aussie, along with other, and I was going to buy the Aussie yesterday. I told the traders in our chat room, I'm like, I'm going to go, because we had this daily hammer. It wasn't at the very bottom of a downtrend, but we had this hammer, and I'm like, man, I'm tempted to go along the Aussie, and I decided not to, which obviously in retrospect was a bad decision. But anyway, we're taking off now. Now the question is, and let's delete everything for a moment just to get rid of the mess. Okay, so we had this you know um, megaphone pattern, right? We're obviously getting we're getting some buying coming in with the dollar weakness overall. Oops. So when you're looking at this chart, you got to go, well, okay, we're past the 38% retracement, right? Okay, looks like we're breaking out. We have some horizontal resistance up here that we're struggling with at the moment. Um, but if we can break those highs, and this is a very big congestion area too. You can see it all through here, right? You can see that huge congestion area. So this, to me, between these two red lines, looked like a pretty decent sell zone. But I would give it all the way up to 78.90. Now, we do have this double bottom, which, could theoretically extend us a lot higher. So, if you look at where we can extend to, we can extend a lot higher, especially if the dollar continues cascading lower. Um, but there's a lot, obviously it faces a lot of resistance on the way up too. So today it's struggling at the 78.40, but really this 50% retracement is going to be another hurdle, and that comes in at 78.80. So 0.7880, and we are definitely range bound in the Aussie. Okay, and support, is probably down here. This is probably close to the area where people go, oh crap, I got sucked into long Aussie and then it just reversed on me. I don't want to be long anymore. Probably somewhere down below here. Let's go to an hourly and figure out where that is. Yeah, so that comes in around 70. You got to, give it a little wiggle room, to get back below 78 cents. Probably somewhere around 78.85. We get below there and, or 77.85, excuse me, 77.85. We get somewhere below there and you're probably going to get people just pulling the plug on uh, on the Aussie dollar long, I suspect. Okay, let's go over to the dollar index. And I'm going to ask you guys a question really quick. And let me go over to my questions because I'm not looking at them right now. So, who are my harmonic traders? How many of you guys like harmonics? You love looking at like harmonic patterns. Mirko does, definitely Michael, Benedict. Um, that's it? Three people? Shoot. I love that. Okay. Patrick, not giving you enough time to Patrick H. Malkin's learning them, but they're super. Nick says too right. I love a good garlic. Me too. I love a good garlic. Um, R. Mackey says, isn't that a musical instrument? Yeah. And Charles likes them. Tim says, I'm trying to quit. Bob says, I hate harmonics, but he likes whistling. Dixie. Gary says, what? Uh, Jared says, Polly loves them. Okay, so yeah, that was some sarcasm. Sarcasm. Sorry, I caught that. I caught that, Jay. Hey, you know what? Hey, Jared. You know what I'm gonna do for you. Euro pound, 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 euro pound. Yeah, I have to say about that. Um, if you guys missed it the other day, Jared uh, from our chat room, he gave to charity because he counted how many times I said euro pound because I was upset that I missed that short by 4 pips because I had that limit order out there, and so I was just whining like a little baby, and he counted, and I think he came up with 30, and then so he donated like $30 to a charity. Okay, so anyway, the reason why I asked if you like harmonics is not because of the dollar index per se, but I'm looking at the US dollar. So I'm going to go back, I'm going to go to that here in a second. But anyway, and the reason why I want to point this out is because the US dollar, which is the broader US dollar index, has actually more to go too. So we're past the 786 retracement on the dollar index. Thing about the dollar index is if you look at relative strength, we're down here in very oversold conditions. We don't stay down here too long, typically. I mean, if you go, this is a 4-hour chart. You go back here to the to this time in May, and this is you know excuse me, this would be April. Towards the end of April, we spent some time in very oversold conditions. But you can see that the dollar didn't do a whole lot while we're in oversold conditions, but just stay down there, and then it finally popped back up. You know, as we get down in these oversold conditions, the dollar tends to bounce from there, and you can see over here, bounce from there. We were oversold here, bounce from there. We're oversold here. We're probably going to start looking at a decent bounce area for the dollar soon. There was this like I said, this time in the end of April, we actually sat oversold for quite some time, and we just congregated down here for a couple of days before bouncing. Over here we got oversold, and then we started to bounce as well. So could we bounce from here? I think it's a higher possibility, here in the coming session or two, based on historically what we've seen on this 4-hour chart. But the thing is, I don't see any support here in the year. That's in the dollar, and that's a bit of a problem. Now, you can also look at the dollar like this. We might have a descending wedge, okay? But my focus was really more on, not on the dollar index, was actually on the US dollar, which I'm going to go into here in just a second. But this dollar index, you have to imagine if we have a weak series of data today, we could very easily see lower levels in the dollar. So what's going to be really important support today is going to be 93. Now, don't forget, 92.50 is not too far away. 92.50, and I know I've said this at least 20 times over the last couple of months. We get to 92.50, I really don't care what we're doing with any other currencies. I'm buying the dollar. That is the 2005 breakout point. I think it's 2005. I mean, go back to them on the chart. It's right here. Actually, let's go to the weekly chart. Better. It's too scrunched up. Like I said, I don't care what's happening. When we hit, damn it, that didn't work. It's over here. I don't care what we're doing, but when we hit 92.50 or 92.40, right around there, wherever the highs are, it's like 43 or something. I'm going long. I'm going long the dollar. So I don't care where we're at. The dollar yen will be avoided, but it doesn't matter where everything else is at. I'm going to be buying the dollar, just to let you all know. I know I've said that quite a bit, but anyway. But we do have support down here at 93, so just keep that in mind. Support 93. Resistance, if we get a spike up, I mean, you gotta think about, okay, well, if you're short the dollar, and you got short the dollar post FOMC yesterday, where is it that you go, man, I really need to start covering? It's going to probably be right there, 94 and a quarter. And if you're not short the dollar, this is probably a good place to be on the short side of the dollar. You know, something that looks like that. Okay, so 94 and a quarter. Now, and I still think we're in a big range. I mean, if you look at the dollar, you look at the dollar index. I mean, this is, I know it's an hourly chart. You go out to the 4-hour chart. You know, we look range bound. We're at the lower end of our range, but we still look range bound. Now, I want to take you over to the US dollar. So for those of you that like harmonics, there's a bat pattern in the US dollar. And I think it's a fairly significant bat pattern. And the reason why I'm cognizant of it is because earlier this morning when I bought the dollar Canadian, I'm going, okay, well, realistically, is there, I mean, looking at the dollar index and looking at, the US dollar, this US dollar, is there further downside in the dollar? There is. So I want to be aware of how low the dollar can actually drop. And on a broader basis, the US dollar could actually drop a little bit further. This is a bad pattern, and it's not my favorite pattern by any stretch of the means, but it's pretty clear, right? And that could take us all the way down, all the way down to this 11,700 level. So I am looking at it because I want to be aware that if we have some dollar weakness today, that those levels still can be seen. Okay. All right. Mirko said 43% no bueno. This is a 38%. You can say it's just like that. You maybe had a little bit of an overshoot. You know what I'm saying? But, because harmonics, I mean, as much as I'd like to say that everything's perfect, the thing is there, trend lines, fibs, nothing's exact. If it was exact, the setups are far and few between. So I've got to give the little overshoots here and there. But anyway, but that's what I'm looking at there. Now we have 10 minutes before data comes out. The Canadians hit new lows. I'm still long, not worried about it. The dollar Canadian is at new lows though. Let's see, the euro dollar is just hanging around 114. Stocks are just kind of slow. Gold, look at gold, guys. Gold continues to break higher. But here's gold. Hold on really fast. Well, obviously I haven't looked at that in a couple of days, so let's get rid of that for a second because I just really want to see where we're at from a retracement standpoint. Ooh, wow. That's going to be some big resistance here at 1205. Some big resistance right there. 1205. Huge resistance for gold. Oh, you know what I want to do? Damn it, I almost forgot. Sorry, we just have a couple minutes to do this. Let's go take a look at the Nordic currencies. I want to take a look at the Norwegian krone because obviously the Norges Central Bank actually cut rates overnight. So let's do this. Does that trend line coincide with, oh, that's a 38% retracement. If this thing gets above 776, it's going to squeeze. For those of you, the guys that can trade it, 7.76. That's going to start squeezing. Support if the dollar, if the dollar falls post we have weekly unemployment claims, CPI data. If the dollar falls, that's going to be good support down here. 766. If I could trade the US dollar and Norwegian krone, that's where I'd be looking to buy it. I'd be putting in bids down there if I could trade it. It's still in the range environment. Okay. All right, guys. We are 6 minutes away from news. I'll put you on break for 5 minutes. I'll be back a minute before. Remember, we got news coming. Don't go anywhere. Be right back. And where is my, oh, there it is.